Santelli is standing by at the CME in Chicago. Rick, take it away.
Yes, we are awaiting June retail sales and, as Becky pointed out, import-export prices. The less growth story is a biggie, so this goes a long way towards addressing that. June retail sales headline expected down 0.3%, comes in better. Unchanged. Unchanged is actually pretty good compared to up 1/10. So we've had back-to-back months that have not been negative. Last negative month we had was April at down 0.2. Don't see revisions yet. If we strip out autos, the number improves dramatically, up 0.4%. That's the best level since March when it was up 0.6%. And if we look at ex-autos and gas, it continues to improve, up 0.8. That is a solid number. Up 0.8 equals where we were at 1 year ago in July. To find a higher number, you go all the way back to January of 23 when it was 3.2. Now, I do see the revisions start to come in. I'll get to those in a moment. The control group for retail sales, and that's the number inputted into other higher up the food chain economic releases, comes in up 0.9. Another powerful number that equals where we were in March. To find a bigger number, you go to April of last year when it was 1%. Now, if we look at the revisions, we've had some. If you look at up 1/10, that now becomes up 0.3 on headline. Down 1/10 ex-autos, it becomes up 1/10. Up 1/10 ex-autos and gas becomes up 0.3. So all the revisions are positive and all the numbers better than expected. And other than the headline number, all numbers sequentially higher. Now, if we look at import prices, expecting down 0.2, they come in unchanged. Last month's get cut in half from -0.4 to -0.2. If you look at import prices, ex-petroleum, up 0.2, exactly mirror image of the -0.2 we were expecting. Up 0.2 is the warmest since April when it was up 0.6. If you look at year-over-year perspective on import prices, up 1.6. Definitely warmer than expected on this one. And 1.1 last month gets upgraded to 1.4. So 1.6 in this one actually becomes the hottest number going back quite a ways, all the way to Dece of 22. That's going to take a few points away. Now, if we look at export prices month over month, -0.5 going the other way. That's a big drop. -0.5 follows -0.6, which becomes -0.7. So back to back. Big negatives on the export side of the equation. That might tell us a bit about overseas demand. And finally, on a year-over-year perspective, they're up 0.7, a bit less than expected, following up 0.5. After all of that, we do see that we went from 4.17 in a 10-year to 4.19, but that's still down 4 basis points on the short end. We're now currently at 4.43, which is 3 basis points higher than we were, but still down 3 on the session. So to summarize, less growth, that story is not borne out in retail sales at all. So we want to continue to monitor the positive revisions, and this should be good for stocks under normal conditions, but it may have Fed implications, although the July meeting certainly doesn't seem to be on the table. And nothing at the Economic Club of New York, according to my Fed sources, really changed that dynamic. Becky, a very lot of numbers and revisions. Back to you.